When you truly understand and master the concept of supply and demand zones, you will be able to trade with the smart money, and you will know exactly when to enter and when to exit the trade, so that you can maximize your profits and minimize your risk. But in order to master these supply and demand concept, there are specific conditions which you must fully understand. And these conditions serve as critical filters, enhancing the accuracy and reliability of our trading decisions. So in this video, I'm going to show you the rules we use to identify high probability supply and demand zones that are usually respected in the market. Additionally, I'm going to demonstrate our technique for marking them on the chart, alongside the psychology behind these concepts and multiple chart examples. So guys, if that's something you're interested in, as always, hit the like button for the YouTube algorithm, subscribe and turn on the notification bell to get notified when we upload a new video. Now, without further ado, let's jump straight into the video. Now, first and foremost, what are supply and demand zones? Basically, in smart money concepts or SMC, the supply and demand zones are areas on a chart where significant price movements occur due to the presence of institutional traders, also known as smart money. These zones are characterized by rapid price changes, which shows that a large number of orders have been placed around the area. However, not every significant price movement qualifies as a key supply and demand zone, and to identify a key zone, three main criteria must be met. The number one is that the zone must create an imbalance. Secondly, there must be a break of structural level. And finally, the price has to create or collect liquidity. These three criteria are essential for defining a key supply and demand zone in the market. So in this sense, any zone that meet these criteria are considered key supply and demand zones. And other zones may be classified as internal structures and minor levels. The imbalance, inefficiency, and fair value gaps are closely related concepts in SMC. When smart money enters the market will create an imbalance between buyers and sellers, leading to significant price movements and gaps between the wicks of the candle. In this examples, the price is buy-side inefficient, and there are fair value gaps between the wicks. A fair value gap is a three-candlestick pattern where the wicks do not overlap. Here, you can see the examples of efficient and inefficient prices. In the second example, the wicks meet in the middle, indicating no fair value gaps or inefficiency. So how can we use this to our advantage? When the price moves significantly and leaves a fair value gap, it often returns to these areas to fill the gap and restore the balance in the price movement. So by combining this with the supply and demand concept, we can identify potential trading opportunities. In this example, you can see that the price is moving in an uptrend. Here, the price has created fair value gaps, indicating buy-side imbalance and sell-side inefficiency. Below the imbalance, we find the demand zone that contributed to this imbalance. Let's say the price pulls back and forms another demand zone. The key difference here is that the second demand zone lacks an imbalance. Consequently, there is a greater chance for the price to make a deep retracement to the initial demand zone that created the imbalance. This is because the initial zone holds more weight due to the imbalance that it has created. Inefficiency will act as a magnet, drawing the price to fill the gap. Observing this scenario on the chart, we should target the demand or supply zone that created the imbalance, as this zone has a greater chance of reversing the price, compared to zones that are associated with efficient movements. The next criterion that qualifies a supply and demand is the break of the market structure or a change of the character. A supply and demand zone is only valid if it breaks the structure or an opposing zone. For instance, imagine we have 3 consecutive moves like this. When these moves break above the previous market structure with an imbalance, we establish a valid demand zone. If there is another break of structure with imbalance, a new demand zone is created. If the price returns to revisit this zone, it could present a good opportunity to go long. But if the price breaks below the demand level, it indicates a change of character, showing bearish momentum. This price shift means that the sellers has taken control of the market and a supply zone has formed, making the market bearish until the next level is reached. After reaching this unmitigated demand area, we no longer have a clear directional bias. but we have to observe the price action at this zone to determine if the demand is going to be respected. And at this point, you are going to go to the lower time frame to check a confirmation on the lower time frames so that we can take long positions with reduced risk. But if the price shows no signs of bullish momentum, we can continue looking for short opportunities. Now, the third criterion is that the price has to collect liquidity. This is considered a +1 criterion because it is not essential for creating or defining a key supply or demand zone. Sweeping liquidity is not required to have a valid zone, but it serves as strong confirmation. The first two rules, the price creating an imbalance and the break of market structure, will have to happen in the movement, and the third criterion, a liquidity sweep, is just a confirmation. When the price forms supports and internal structures before reaching a demand level, it increases the likelihood of a bounce from that level. These supports attract traders to buy the asset, and their stop-loss orders are considered sell orders. And then, if smart money wants to buy this asset, it needs these sell orders to facilitate its purchases. This price movement creates a condition where the price tends to bounce off the demand level as buyers step in to take advantage of the perceived value, and sellers' orders are absorbed by this buying pressure. Forming liquidity grab patterns within supply and demand zones provides strong confirmation for short-term market structure shifts. And after these patterns form, the market typically moves toward the liquidity zones on the opposite side. But how does a valid liquidity sweep pattern and reversal occur? Imagine that liquidity exists below the lowest point of this wick on the chart. In a valid liquidity sweep pattern, we are going to look for a wick that breaks through this level and immediately closes above the range, or for one candlestick to close below this line with the next candle immediately closing back inside the range. This is an early indication of a potential temporary reversal, at least up to the supply level ahead of the price. If the price then manages to break and close above the supply zone, we would observe a change of character, confirming that the downtrend is over and a true reversal is certain. So combining the concept of a change of character with the liquidity sweep pattern provides valuable insight into future market movements. Now, if you're a cryptocurrency trader and you want to experience the best in the crypto market and trade with the best crypto exchange, I'm going to introduce you to the Fairdesk Crypto Exchange. Fairdesk is a crypto exchange that is revolutionizing the way we trade cryptocurrency. It offers robust security, user-friendly features, and competitive trading fees. Fairdesk prioritizes security with advanced encryption, two-factor authentication, and cold storage for most funds. Now, if you sign up with the link in the description, you are going to get 5% trading fee as a USDT rebate, as part of the reward for our community. You can see other benefits that you are going to get if you sign up with the Fairdesk Crypto Exchange. This benefits is only for my people who sign up through the link in the description below. You can also join my Telegram channel as well, because I will start posting very important trading tips over there from now, and I will be happy to see you there. Fairdesk has an intuitive interface that makes trading simple and efficient, with real-time market data, customizable charts, and various trading tools. Fairdesk is optimized for seamless trading on both computers and mobile devices, allowing beginners and advanced traders to stay on top of the market and make informed trading decisions. You can see that I have also been trading with Fairdesk. The platform offers a diverse portfolio of cryptocurrencies, including Bitcoin, Ethereum, and emerging altcoins, and even meme coins. Fairdesk offers competitive rates, allowing traders to maximize their profits. Fairdesk dedicated customer support team is available 24/7 to provide you with assistance through their live chat and email. Most importantly, if you are from the United States and other restricted countries, you can use Fairdesk to trade cryptocurrency without using VPN. So go ahead and sign up to Fairdesk Crypto Exchange with the link in the description below to experience a new level of trading. Now, let's move on to the most important part of the video. Now, we are going to show you some examples on a real chart, using the concept we have discussed previously on the steps of how to identify a valid supply and demand zones. Now, here on the chart, you can see that the market was in a short-term downtrend until it collected liquidity around here using this candle's wick. Then the market later formed a change of character here and started spiking up aggressively. But if you look closely, you can see that the price formed a break of structure around here and the price went up again. Another break of structure was formed here with a fair value gap or an inefficiency. And therefore, you could have drawn in a demand zone like this. Notice that when the price reversed from the upside direction, the price tried to continue in the upside direction with these bullish engulfing candlestick pattern. But it reversed aggressively and broke below the demand zone, first forming a change of character, secondly, an imbalance of a fair value gap, and then a supply zone around here. Notice that when the price reversed, it went back and tapped into this supply zone with this candle wick rejection and then started selling downwards. And at this point, if you were observant enough, you could have placed a long trade like this at the close of this bearish candle and set your stop loss just above your supply zone and then extend your profit target down to this level right here, which is equivalent to a 3:1 risk to reward ratio. Essentially, this technique focuses on three major concepts: inefficiencies, breaks of structure or a change of character, and liquidity sweeps. You can combine any trading setups with the supply and demand strategy to enhance your trading decisions and your strategy as well. Here is another example. You can see that the market was in a long-term downtrend, forming lower lows and lower highs and break of structures until the price became exhausted around here and reversed, collecting liquidity around here. The price later formed this internal change of character, indicating the start of a bullish trend. As you can see, the price tried pulling back around here and immediately spiked up, creating an imbalance or inefficiency, a break of structure, and then a demand zone here. This external change of character should be another confirmation that the price has changed to the upside direction. Then, when the price pulled back to the demand zone, you can see that the price formed this long wick rejection and a strong bullish candle, confirming your bias. And you could have placed a long trade at the close of this bullish candle and set your stop loss just below your demand zone, and then extend your profit target up to this level right here, which is equivalent to a 3.2 risk to reward ratio. Now, if you are a Forex, futures, and a stock trader, I would like to introduce you to the XNES for X broker, because XNES for X broker offers low spreads, no commission, and unlimited leverage for new, intermediate, and professional traders. These features make XNES the perfect choice for all traders. So go ahead and sign up using the link in the description below. Then fund your account and start enjoying additional benefits. Now, if you are interested in learning more about advanced concepts, strategies, entry reasons, and how to stay disciplined with a trading plan, please click the like button for the YouTube algorithm, subscribe, and turn on the notification bell to get notified when we upload a new video. Thanks for watching. See you in the next video.